Hello again. We are going to go over the federal income tax, some of the more complicated aspects of it, what people are having trouble with anyway. And I have just picked a few examples out of the book, and I'm not going to do the whole problem. Like the first one I think is 43B or something to that effect, where you have, I picked these three individuals. There's two of them are single, one's married, two withholdings, one withholding, four withholdings, and there's a gross pay, and there's how they're paid. So I went ahead and did the wage bracket method because I really can't show you how to do that. That's at the back of the book. And the key on this one is make sure you read it. If it's like the 1040, I think it's at the breaking point, and the first one says but not over, and the first one says equal to, and the second one not over. Well, 1040 is you go down to the next line down where it says not is equal to 1040, because 1040 is equal to 1040. So if you look that one up, you'll see that it's 133. This one is beyond the table, the wage bracket table. So what you have to do on that one is use the percentage method. And that's not really the answer. They do get taxed, but you have to use the percentage method. But based on this problem, you cannot answer that one. And this one is 157 because you make sure you go to the semi-monthly married table, okay? Because each table, they have two tables for every time period. Okay, what we're going to concentrate on is the percentage method. So for the percentage method, you will start with the gross pay of 1040. Now this individual is single with two exemptions. So what we want to do then is take equal the $76, because that's on page T2 in the back of the book, times the number of withholdings, which comes to 152. Now you add those together, it gives you 888. Then on the next page, you'll look at the single weekly table, and make sure you get the single, not the married, because they're side by side. And you look at 888, and you see, okay, that falls into this category right here. Okay, this is the line we want to use. And you notice the first thing we do, we subtract off the 753. Okay, and I didn't subtract it, did I? I missed it. Okay, subtract off the 753. Make sure you subtract it, because otherwise don't get upset. That gives you $135. That amount, the 135, is taxed at the 25% bracket. Oh, I was going to do the calculation. Just the one with the 25% bracket. Okay, and then the excess, then you add the rest of it. Then you add $97.75. So the tax for this under the wage bracket method, or the percentage method, is $131.50. Okay. Flume, the gross wages was $21.90. Okay. Single, so we just subtract off the $76. Now we look at what amount does that fall into. Well, that's this category here. So we subtract off the $17.62 for that, gives us $352. But the tax rate that he fell into was 28%, or she, whatever it is. Okay, and then we add $350 to that, because that's the tax up to that point. So the tax for this individual is equal to $448.56. Okay, and I want to do one more to help a little bit, and that was for this one. So the gross, this was a different chart. So a semi-monthly chart, the gross pay was $23.50, and I don't know that like this. There we go, $23.50. Okay. This individual married 4, but we don't care at this point. We want to. This was semi-monthly, so we take the 164 times the number of allowances. So we subtract off 658.40. Okay, now this one had a different table. Okay, the 6840, this was married semi-monthly, so again, that's a different table. It's on the same page, but you go farther down, and you see the 1656 falls into this category, so we subtract off we subtract off the 1108. It gives us 548. The tax rate for that individual is 15%. And then we also then add the 7560 to that, so the tax is 157.89. Okay. Hopefully that helps on that section of it. Okay, that's the percentage. This gives you the wage bracket method comparison to the percentage method. You don't do both methods, you only do one or the other. Now this individual was over, so you can't do the wage bracket. You have to do this percentage method. So his tax would be 448.56. Okay. The next one is 46B, because I know that had some problems. And this was an individual that wanted to give a bonus of $750. Not before taxes, but after the taxes. So this is what they call grossing up. And we use a bonus rate of 25% for the federal income tax, and the Utah tax was 5%. So the equation you want to use for that will be 750 divided by the 1, which represents 100%, minus 0.25, which is the bonus tax, minus 0.062, which is the Social Security tax, minus 0.0145, which is the HI tax, minus the Utah tax of 0.05. Okay, so that's the equation you'd have to use for that. Okay, so it's the 750, which is the amount, the gross amount you want, minus 1, minus all these taxes you have to take. Okay, so if you did that, you have equal 750 divided by 1 minus, now I'm going to do a little different, 0.25 plus 0.062 plus 0.0145 plus 0.05, and then close, and you get, if you want to do it so that it's to the nearest penny, you do the round function, and then 0.2, so it gives you 1202.89. Okay, so what you'll do is put 1202.89 here. This is your check. Just make sure you check it because it may or may not work correctly. The federal income tax, remember, was this number times 0.25. So that gives you a negative, let's put a negative in there. So it gives you a negative 372. Probably ought to use the round function just to be safe. So, because the rounding, formatting's okay, but it doesn't always work because formatting is different than rounding. I think I went over that before. Okay, the OSDI times 0.062, comma 2. Okay, and then we have equal round for the HI times 0.0145. Oops. Yeah. Comma 2. Okay. And then we have the Utah tax, negative 12, that was 0.05. Okay. And notice we're off a penny. Okay, and that's why you check it. So what we actually have to pay them is 1202.88 for the gross pay. If you notice we do that, then it comes out okay, and everybody's happy. That gives them a check then of $750 for the bonus, and that's what we wanted. Okay, so this is the equation you have to use for that. Take off this bonus tax, Social Security, and then that's what they call grossing up. We know what the net pay is going to be, so we have to find the other. Okay. Then the last one I'm going to do is 48B, And I'm just going to do a couple of them. This was the one with the bonus, and the bonus is taxed at 25%. So what we have to do first is find the bonus. It was based on the yearly pay. So you take the monthly pay in this case times 12 times 0.08. So the bonus is $4,032. Okay, and for this one we take the 810. I only picked a couple of them, times 52 because it's a weekly pay, times 0.08, and that bonus is $33.69. Okay, now to calculate the federal income tax, which is what we want to do here, the first thing we do is we go to the wage bracket method, because we actually do two calculations. So we go to monthly for Wayne, and we look at the wage bracket method for the $4,200. If you do that, married with 5 exemptions, you see that that tax is $205. Then for the bonus tax, we take the $4,032 times 0.25. So the tax will be $1,213 for the FIT. And I also picked course, which is like the third one down, single with 1. The wage bracket method was $96 on the 810, because that's what you want to look up. For the bonus tax, you take the $33,660 times 0.25, gives you $938.40. That's the tax for that one. And you do all of them the same way. You do two calculations, the wage bracket method for the regular pay, and then 25% of the bonus pay. And then you add them together to get your tax. Now all the other taxes, you just base it off of the 82.32 and the 40, the total for the wages, the federal and the FICA and the HI and that type of thing. Okay. Hopefully that helps, and that should be it for this one. And until I find out differently, I'll talk to you later. Bye.